I'd love to have a golden bullet for you, a golden nugget for you, Liana. The truth is, we are now living in a higher interest rate environment. There's a lot of people that are hoping that interest rates are going to tumble back to the sort of 1%, 2% interest rates that they were that we've all been getting used to over the last 10 years. Unfortunately, that doesn't seem to be the case. Obviously, I don't have a crystal ball, but all the evidence points to the fact that we're in for a long period of a higher interest rate environment. And when I say a higher interest rate environment, I'm talking about really an average interest rate over the last 30 years.
Because it's still fairly low, right?
What we've had for the last 10 years is a seriously low interest rate environment. Mm-hmm. And that has fueled house prices, and it had fueled higher mortgage balances. And that's where people are concerned now, because people were purchasing based on that cost of borrowing. And now we have a new cost of borrowing, and that cost of borrowing is around 5%. And the 5% cost of borrowing is the new norm. So what we are finding with clients that are looking to remortgage is what we're encouraging people to do is to plan ahead. We're encouraging people, we can organise a mortgage, or we can secure a fixed rate mortgage offer up to 6 months in advance of a fixed rate expiring. So we're encouraging people to plan ahead, understand what their mortgage payments will be going to, and avoid that massive interest rate shock that a lot of people have been experiencing if they've just suddenly coming off a standard variable rate and trying to secure a fixed rate right now. We've seen an increase in offset mortgages. So people with cash balances sitting on their bank account, trying to offset some of that higher interest against their mortgage. So it's offset mortgages are becoming more popular. People are extending mortgage terms. So of course, if you extend your mortgage term, the monthly payment reduces. It does mean you pay more interest over the long run, but it's a way of being able to afford your monthly payments depending on your budgets.
That's good advice, because some people might not be looking at that, and people that own properties that are remortgaging may not necessarily have taken the longest term for fixed term.
Yeah, of course, this is only on repayment mortgages when you're paying back the capital and the interest. For many years, as interest rates have been falling, as advisors, we've been advising people not just to benefit from a lower monthly payment, but also trying to reduce your term. How would you like to? How can you reduce your term over and still pay the same monthly payment but reduce your term rather than benefiting from a lower interest rate? So right now the conversation is slightly different. Those people that maybe have taken 5 years off the mortgage may need to increase by 2 or 3 years to ensure that their mortgage is still affordable. Now, the Prudential Regulation Authority did set out that they impose certain stress tests to ensure that the market could afford an extra 3%. Borrowers could afford an extra 3% if there was a rate rise. And this is where we are right now.
Yeah.
The thing they didn't take into consideration, of course, because nobody knew, was that everything else would be going up at the same time. So that's the issue that we've got right now, is that the interest rate shock, if you like, for people looking to remortgage. And that's sort of where we are right now in the market.
So trying to grasp onto the positive of that conversation, you think that we've seen the biggest rise in interest rates, and that there isn't a huge amount further to go?
I'd like to say yes to that. The Bank of England are looking to continue to increase their interest rate into next year, the base rate. They expect it to be maybe at 4.5%, 5%, but the recent base rate rise, the 3rd of November, has already been factored in. So where interest rates jumped to sort of around the 5.5% mark, that was already factoring in that most recent base rate rise. So we're not expecting another jump in November.